What about gold prices? Well, it's $3,840. Hey, but you look, it's gone up 45% this year. Not a word. Not a word. Go to CNBC. Go to Wall Street Journal. Go to the New York Times. Gold prices are spiking because of the fear of geopolitical insecurity and socioeconomic distress. Up 45% this year. Shut your mouth, don't talk about it, because we don't want the people to know how bad things are. So keep investing in that stock market.
In today's news recap, UBS raises gold, silver price forecasts again. UBS has raised its gold and silver price forecasts again, flagging strong momentum from investor demand, macroeconomic uncertainty, and persistent fiscal and geopolitical pressures. The bank now expects gold to reach $4,200 an ounce across all timeframes, up from its prior view of $3,800 by end 2025 and $3,900 by mid-2026. Silver forecasts were lifted to $52 and $55 an ounce, compared with previous targets of $44 and $47. UBS strategists said the revisions reflect expectations of stronger central bank and exchange-traded fund demand, alongside ongoing support from declining real rates and fiscal imbalances. The strategists also pointed to silver's greater room to overshoot, given its higher volatility, adding that their forecasts remain skewed to the upside. The team said macro, political, and fiscal dynamics should continue to support demand for safe haven assets, allowing the current fear of missing out mood to persist. UBS also expects the gold-silver ratio to move towards 76 times, reflecting stronger silver investment demand relative to gold. Underlying drivers include the Federal Reserve's return to rate cuts, a weaker U.S. dollar, and fiscal deficits in major economies such as the U.S. and France. UBS sees these factors as unlikely to be resolved soon, keeping the backdrop favorable for real assets. Central banks are expected to buy 900 to 950 metric tons of gold this year, just shy of last year's record, with private investors also increasing allocations as a hedge against U.S. Treasuries exposure. While gold and silver lead, UBS remains more cautious on platinum and palladium, which are still tied closely to industrial demand. The bank raised its platinum forecast to $1,350 an ounce, up from $1,200, but said the metal still implies lower prices ahead. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
The economy, the numbers just came out today on new hirings totaled 204,939 so far in 2025. This is according to Challenger Gray and Christmas. From the same period a year ago, the lowest level since 2009. 2009, the height of the Great Recession. That's where job numbers are. All right? They're going to lower interest rates. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go. Gold is dollar-based. So now as the other currencies go up, it's cheaper to buy gold in other countries. And that's what's going to happen. They're going to keep lowering interest rates. The death of the dollar is before us. But again, as I said, wild card. Orwell could not have come up with a better name than stable coins, all right? All the banks are going to go CBDC. Oh, what they just came out last week that the international debt level is about $340 trillion. How are you going to get rid of it? There's no way. when you look at the United States debt level, no, it's not 37 trillion. When you put Social Security, Medicare, Medicaid, and all the other government expenses, it's well over 100 trillion. We got a new coin. They're going to come out with a digital coin. As we're speaking, again, we call things the way they are, not the way we want them to be. We've been very bullish on Bitcoin, particularly when Trump got elected. This is the guy that's made fun of Bitcoin when he wasn't president back in 2021 and 20, calling it a bunch of crap, how terrible it is, killing the dollar. Hey, but now my family's in it. Shut the hell up, Celente. And now as we're speaking, again, last week, crypto is down to like $109,000 a coin. $109,000 for something invented with nothing behind it. And now it's up, as we're speaking, 118,000. The gang's in charge. They're going to go from dirty cash to digital trash. It's going to happen. And the reason they're also going it, they're going to say this digital coin is worth way more than our debt level. So we just got wiped out our debt level. And they want digital because they know every penny you spent, where you spent it, what you spent it on, so they can get their tax money, most important. What do you got? 1.4 billion people living in China, 1.4 billion in India. They had enough of the United States geopolitical and socioeconomic hegemony. They're finished. America's become the country that our founding fathers fought against, Great Britain. War, 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 war. And again, go back, all the wars where the sun never sets on the British Empire. After World War I, the pound died. The dollar became the most important currency. And now the United States is war, 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 war. The dollar's going to die. It's the death of the dollar's on the way. And again, going back to digital, now there's talk about digital gold. Right? They go digital gold, that could wipe out a lot of the cryptos. Because now you have a crypto backed by gold. We're very positive on the gold future. Very. And again, sadly.
In today's precious metals news recap, UBS says silver poised for all-time high as investors flock to precious metals. Silver prices have surged to $42 an ounce, a 14-year high, on the back of record gold prices and a wave of investment inflows. Following the rally, UBS has raised its forecasts for the metal, saying it could reach all-time highs in the coming year. The bank now forecasts silver to trade at $44 an ounce by the end of 2025 and climb to $47 by mid-2026, aligning its outlook with a recent upgrade to gold. We flag that silver prices could reach an all-time high, a view that supports a long position in the metal or selling its downside risk for yield enhancement, strategists Dominic Schneider and Wayne Gordon said in a note. The rally comes despite sluggish global industrial activity, with investors drawn to silver by the same macro forces propelling gold. UBS pointed to geopolitical tensions, U.S. fiscal deficits, slower growth, and the prospect of Federal Reserve rate cuts as drivers of demand. Silver's strong correlation with gold, typically between 0.5 and 1, has amplified these effects. Exchange-traded fund inflows underline this trend. UBS highlights that silver-backed ETFs have added more than 20 million ounces this quarter alone, bringing this year's total close to 80 million ounces. While significant, holdings remain more than 200 million ounces below their pandemic-era peak in 2021. Looking ahead, strategists see silver benefiting further as monetary conditions ease and investors look ahead to a cyclical recovery. The team expects the gold-silver ratio to decline toward 80, supporting relative outperformance for silver. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
The way gold is spiking now is beyond, again, pick up any of the major media, not a word. Not a word about gold's prices spiking. Let's just talk about AI. Just talk about AI. Second, it's a crime syndicate. They're murderers and thieves. We talked about the murder of the war. Let's talk about the thieves. What happened with the panic of '08? The domain, by the way, that I took out in 2007. The Federal Reserve pumped in 29 trillion with a T dollars to bail out the banks. That's according to the Levy Institute, Bard College. It's a crime syndicate. Let's go back to the dot-com bust. Go back to your Trends Journal, January 28th of this year. Dot-com bust 2.0. Trends are born, they grow, they mature, reach old age, and die. AI became public just 3 years ago. It's an infant. You don't invest all your dough in the infancy of the new, whether it's high-tech, heavy industry. You don't invest all your money in the first baby born. And that's what they've done. Cover of our magazine on February 5th of this year. Dot-com bust 2.0. Once upon a time, young people are totally AI and high-tech addicted. China's investing very heavily in the AI market. It's the future. Again, like it, don't like it, it's what is. And what's going to happen, you already saw it with DeepSeek. It didn't cost them $100 million to do what they did. It only cost them $6 million. Oh, and we don't need these big chips. We need smaller ones. Get NVIDIA out of China. We're developing our own. Same thing with India. There's going to be a dot-com bust. They've way over-invested. Look at the PE ratio. It's way out of line. There's going to be a dot-com bust. And again, when all else fails, they're going to take us to war. They'll get the people's mind off it. And again, the Fed will do what they did before. I thought the markets would crash in 2012, all right? I was wrong. They did not teach me about zero interest rate policy or a thing called quantitative easing in Economics 101 or graduate school. They'll make up any crap they want. Again, digital coin, CBD, they're going to do everything they can to artificially prop this up. It's going down. It's going to crash. No one, anywhere, here, Google it up. Go to Castle Systems. Look up the office occupancy rate. I looked it up a couple of days ago, 54%. What's the office vacancy rate? Nobody in the buildings. It was 11% before the COVID war, and now it's 20%. There's going to be failures. They're not going to be able to pay on these office buildings. There's going to be a collapse. Banks are not going to be able to cover the loans. Again, I thought things would crash when they locked down the world. I didn't know they'd bring interest rates down to zero, keep them negative in Europe, and pump in countless trillions of dollars of fake money backed by nothing and printed on nothing. It's all coming to an end now. No one's talking about the office building bust. Go back to 2023, not ancient history. 3 banks failed: Silicon, Conman Valley Bank, Signature Bank, and First Republic. Oh, markets were crashing. Gold was spiking. 3 banks. Now you're going to see 30, 40, 50, 60, maybe 100 banks. Because most of these loans in the office buildings are small and medium-sized banks. They don't have the dough to cover the losses. No one's talking about it. No one.
What do you think of Celente's take? Will gold continue to rise in the fourth quarter of 2025 and beyond? Are we approaching a major top in the global markets? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you, and I'll see you on the other side. Thanks for watching.